Hello folks, I'm L.A. Little and this is your daily TA Wrap, where we take a look at these markets and we do it from a neoclassical perspective each time, asking ourselves what happened today and what might it tell us about the coming ones. I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the beautiful Rocky Mountains. Folks, we had an update today, and it was actually the way you'd probably want it if you want to be bullish. The Dow Jones were up 20, closing at 16,511, almost 512. The S&Ps, they gained 7, closing at 1885, up a little over 1/3%. The NASDAQ up, the composite up 35, 41.25. That's about 0.86% higher. The NDX up 28.5, 36.15, also up about 0.8%. And then if we go over, the winner today really was the Russell. The Russell up 11 points, 1114.43. Oil up again slightly. Gold actually closed pretty much flat to down, as did silver and so forth. The metals were up early, then they gave it all back. And right now they're in a funk extraordinaire. I see a question over here. We'll look at them a little bit later. As far as what happened with these markets today, if you're looking for something bullish, you almost have to look overseas instead of here, because overseas you've actually got most of these indexes of importance hanging at the highs. So I'm going to start there and pop into for example, pop into the CACs. Here's the CACs. To me, is probably the weakest of the majors in Europe in terms of longer term view, because these guys have made their economy by deficit spending, and that can only go for so long. So anyway, they're hanging at the highs though, right? Nice big range up here. They pushed up into the range, and they're just hanging up there at the range. That looks pretty familiar, doesn't it? It kind of looks like ours, just in reverse, in that most of ours is over here and going sideways, but they've done the same thing. They had one spout down and the rest of it's pretty much in a large range. That's the CACs. The DAX looks almost the same. The DAX was the weakest based on the conflict in the Ukraine, and also based on some sentiment and other things that were happening. To me, these guys are still the powerhouse though when it comes to production. And they're back up there too. A little bit of range up here. I'd probably call it this part. Come down, lower volume, flip around. These things want to hang up here at the range, right? They want to hang at the highs. So if I look overseas, that's really where the strength is, not so much here. And if I go to Asia, it really is concentrated in China and the Hang Seng. So you've got the Chinese large cap 8 shares here. You can see how they're hanging, trying to make another push, a little ABCD structure on the upside, and same thing here in Hong Kong, just a stronger version of it. The weakness in Asia has to be the Japanese market. This thing is going to break before it's over, and then they're going to have to come back in and do something on the QE side again. I also saw, that was really it from an overseas perspective. That's where the strength is. It's not here, because if we come back here and we look at our markets, the S&P is still hanging at the highs. We're still pushing up here. We're still in the range. None of that's changed. It's if you go back, it's really the beginning of March, right? This has been going on now since the beginning of March. And depending on how you want to draw it, that's about where I would draw the range. There's been 2 trips over it. Both of them have failed. And there's been 1 trip under it, and that one failed. And the rest of it has all been inside of it. And that's been going on for almost 3 months now. And that's a pretty long time to go across in a range. You had multiple swing points break, but they only extended to 2 to 3 bars and then came right back. You had multiple swing point break here, extended 2 to 3 bars, came right back. Right, it's the same sort of scenario back and forth. Now you've got 2 set up down here again, We're at the top of this, trying to push back into the breakdown bar. That's going to be the next test here, is the breakdown bar. And note on everything we look at tonight, volume's just tailing off as we're going back up again. Almost, the volume is just non-existent on the way up. That's the S&Ps, the Dow, pretty much the same story, except for the Dow's even weaker. So the push up today, right? Absolutely no volume on this push, and it can't even get back into the ties. The S&Ps are up here. This one's pushing. This one's barely moving. Maybe that's the best way to say it. So the Dow's really struggling. And then we go over to what I thought would be the wild card this week, which is the NDX. We talked about it last night. NDX, one of the key areas was to get over that breakdown bar and hold it. It's back over it again. Tonight it actually got a suspect breakout here. So it's over this swing point high on lighter volume. So that's suspect. Doesn't mean it will stop, but it has a higher probability of coming back. That's the push. It's trying to make it up to this area. So the NDX doing what it has to do. And as you saw when I first came on, I was taking a look at Google and Apple to see how they ended up today, because that's where all the strength was today, along with the stocks. Here's Google. Google looks like it's trying to put in some sort of a bottom here, but Apple was kind of the star because of its weighting, 22-23% of the NDX. So another suspect breakout. It gets over this high. I don't know if this one's going to carry or not, but it is over the highs, right? And so Apple can push some more. If you pull it back and look at it on a weekly, actually you have to go back to the monthly. Apple's coming into a lot of huge, just look at the difference here. This is the kind of pushes you're getting now. What is that? 215 million on a monthly. Look at what you came down with. 483, 476, 491. It's coming back up, and it's doing what it has to do, but it's a struggle, and there really isn't much in the way of buyers up here. But I've seen these stocks do this stuff before, and I don't mean Apple, I mean in general. Break it down, a strong stock for a long period of time gets a major breakdown, and then everybody sees it as the opportunity to get in and make a bunch of money, right? And this thing's going to go up here and make 2,000 or something. That's usually not the way it works. Usually it crawls all the way back up, maybe to the 644 number I'm highlighting there, or maybe to the 603 number. Crawls all the way back up there. Actually we're at about 606, I think, tonight, 604. And then starts to give it all up again when it comes up this way. And, I suspect this one will do the same thing. I don't know that, that pattern's going to change. But, it's crawling, and it's doing what it has to, and it's helping out the NDX. Now, if I go over and look at the broader NASDAQ, right, the broader measure, you can see the difference here compared to the NDX. This is the majority of the stocks in the NASDAQ, whereas the NDX is concentrated in the top 100, the top biggest ones. And big difference here, right? It doesn't look nearly the same, does it? And so this one's crawling back up there, at least trying to get back up to that breakdown bar. But you can see what a struggle it is. And if I look at the Russell, which was the star today, up 1%, we came up really no volume today on another bounce. It did get back over this bar. That was the bar I was watching, the 110 area. It closed at 114 or 1114. Got over the 1110 area. It can make it back up to resistance, and that's basically the top of this April 15th bar, 1123. So you're only 9 points away. It did 11 today, so it can certainly get back up there. That's the indexes. I just I don't see that much strength here. I don't think any of this today changes any of my opinion about what is trying to take place. And that is that, we have the structure, have had the structure, still have the structure in place to take these things deeper. They just need a catalyst. They need something to take them down, and so far they haven't found a reason to. Every time we start climbing back up, whether it's here, whether it's on whatever index, the buyers simply step away. There's not very many of them to begin with. They step away, and then we come right back down, and we come down every time. You know, almost every one of these pushes down. I don't know if you've been watching this, but these are breakdown bars, right? And they come fast and furious, and you get almost all the move in one bar. You know, it's happened multiple times on the way down. And so I'm assuming we're going to get another one of those here at some point. It's going to take this stuff out, and really that's when we're going to see if there's really buyers at lower levels. Maybe that's the way to look at it. If we look at the sectors, I was actually, instead of going through the sectors, there's really not much happened in the sectors. Probably I will go to them, but I'm only going to highlight a couple of them. One in particular, and for any of you that are watching, if you want to ask me questions, you can text me. The number is 303-912-9110, or you can email support@TA Today, and I'll try to answer your questions, or you can type them in. Because I will have a little time today. If I go look at the sectors, there's 2 or 3 to highlight. One is the transportation. I've been talking about it. It continues to, try to push higher. Tonight it gets over the high. It's less volume, but it is over the high and can try to run higher. There was another failure. We've had a few failures of late. There was another one here in the XLB. And the bar from 2 days back was a breakdown bar, April 15th. It gets over it, back under it, lighter volume. That looks to try to trade lower tomorrow. We just have weak bounces in most things. The XLK, which was the strength today, the technology sector, if you look at it, volume non-existent, tests the highs again, fells again on price and on volume. We'll see if that leads to a pullback or not. But that's really the 3 main ones tonight. We did see, in case you're interested, we did see the utilities start to break down. It wasn't clear whether they were going to try to hold here or not, but they did break down again, so they're going to make that range wider. So I would think they try to come back into this bar, 41.18. I wanted to go to something we don't cover very often here, and though I look at them, it's not always, at the top of my list. And I just want to show you some of the other sectors, I call them subsectors for myself. Here's the solar. You can see the kind of destruction that's taking place in solar. I mean, we had a high of 51. We're trading at 37. That's 14 off the top, 14 off of 51. I don't know what that is. If you divide it in, that's probably 20% at least. Almost. So, or more, I guess, 14, yeah, it's probably more than 20%. But that's, that's a whole sector getting pushed down. I know you're aware of the social media sector being pushed down. Here's a look at it. It was trading up at 23. It's trading at 17, so that's $6. That also is, it's another 25% or so off of it. And I'm just highlighting some of these, but look at the regional banking. We keep talking about the XLF and how it can't do anything. Regional banking's come off of 42.79, 42.49, so 42.5 roughly, down to a low of 36. So 6 points off of 42. Again, that's 15% or so. For whole wide large sectors. It's amazing actually to see the S&P holding up as well as it is when I look at all that. Now there are some sectors that are still doing pretty good. They look a little worn out. A sector we had bought some time back and made a little money on was the real estate sector. That was still holding up, but they came down with volume. So I suspect that one's going to probably try to consolidate. And there's some others that have been hammered as well. The gold stocks and the gold miners. Here's the GDXJ, the small miners. I don't see anything in this that makes me want to buy. Matter of fact, this looks to test that low. And if I look at the GDX actually looks the same, maybe even a little worse. They're down here pressing against the lows. The only good thing is they're coming back with almost no volume. Now, I didn't show the GDXJ weekly, but here's the GDX weekly. You can see it's coming in to test. This may end up being a buying spot. We'll have to see how it tests. But from a weekly standpoint, maybe they're putting in the bottom. And I know my friend Charles Kirk, he'd look at a chart like this and say, oh, look at this, head and shoulders reversal. And it may very well turn out to be that, right? That's it's definitely symmetric and everything. And the thing that you want to see is happening, and that is that your volume is over, because it's inverse. Your volume's here, lighter there, and even lighter over here, and that's what you want to see on gold stocks. So they may be finally putting in what they need to do, but in order to do it, they probably need gold to quit going down. So let's look at gold and silver, since there's a question on them. And actually, right before I break there, let me show you one more chart on the subsectors. This is the broker dealers. Broker dealers, not quite as bad as I thought they were when I was looking at them a little bit earlier. 40 was the high. They traded as low as 35. So only 12-13% off. But they're coming back down to test again. We'll see how they test. But a lot of sectors torn up. That's really struggled. Flipping over to gold and silver. Let's look at the gold chart first, and then we'll go to silver. So gold was up about 10, 11 bucks this morning, closed pretty much flat. To me, gold is just in a range, and if we're going to get the push up, it's going to have to come as a result of this range being broken and the higher range gotten into. So I would want to see gold start pushing back up into this higher range to give me the confidence that the gold stocks are probably going to go with it. Or, sometimes what happens is the gold stocks will lead gold, and that would happen if they test those lows and then get a nice big reversal day and push higher. Right now, this is just a range trade. You got a high volume here. It was trying to test up into that 2 or 3 times now, and just can't do anything with it. So right now, gold looks like it's lost in the weeds. And if I look at silver, let's see what silver looks like. And I'm guessing silver is going to look about the same. Yeah, just about the same. So silver's drifting back. Now silver had, I traded this, the last time I traded it was back in this area. And silver pushed up, or actually pushed down with a lot of volume, left a little reversal, left a little bar at the bottom, then reversed off with some decent volume on this bar. So that was the, what is that? The May 2nd bar. Since then, you go down, you gap up, you try to test the highs, you fail, you come back. Looks to me like it wants to try to test the lows now. So the lows to me is this bar. It's the April 30th bar, and it's both the high and the low. It's coming right back into support. That's what it just did once, though. One of the things that I always try to remind folks of, that is that when you hit support, and in this case this was support, and it hit it here, and you come off of it, if you come back in again, your odds, they lessen. In other words, they lessen that you're going to get the quick bounce. The first trade is always the best one. So as you come back, right, on a fade trade, as you come back now on this fade trade, your odds aren't as good. I wouldn't be surprised to see it come down to the lower one. And so, if you're going to trade it here, you got to realize that it can trade back to here and still nothing be wrong with it. Matter of fact, you actually would like to see it trade back there and test that low off of this bar. That would be the ideal situation, because then you have a nice big benchmark you can look at. You come back in there, and I suspect you would come back in there with no volume, right? And then that would be, okay, what I'm going to do, I'm going to buy the bottom of the range. That's what I want to buy, because then I can put my stops up underneath the lows, and I don't have to risk a lot, and I've got a lot of upside if this thing does turn here. So that's the ideal situation, right? You don't want to risk much. You take, your probability of success isn't quite as high, but you've got a lot of reward on it if it's right. But it does look like it's going to come in and test it at least at the top. But given that this was a bar to the downside, I wouldn't be surprised to see it test the bottom, 1832. That would be my take on silver. Let me look at a couple more things and I'll come back to your questions. Bonds. So bonds, and we're going to look at bonds on 2 time frames. Let's start with the weekly again, which we looked at last night. So bonds were coming into this big bar. That was a huge breakdown bar. 114.08 was the top. We get to 114 on Friday. We get to 113.96 today, right? And we come off of it. That looks to me like we're finally going to get that pullback. Now, we're still coming back. I'm going to go back to the daily now. We're still coming back on lighter volume. So comparatively, we're into that high. So this is at what? A retest regenerate. A retest regenerate within 6 bars says what? You can get to the other side of the bar. And matter of fact, they like to do that. And so the other side of the bar would be down in here. The bottom of that area, you've got two wide high volume bars there. So this little area down here would be the area expected to get to. So it's 112. And then I suspect from 112 it's going to do what? It's going to do the same thing it's been doing over and over and over again. And that is it's going to try to set up another ABCD structure to take it back up again. Because that's the way they're trading right now. They keep getting the volume expansion for the most part to the upside. Yeah, there's a few downside ones, but most of them have been to the upside. And not only that, we've had so many ABCD structures on the way up that keep completing, right? That makes you want to trade that direction, not the other way. So I think this 112 area down to the 111.20 or so, this is the spot if you're wanting to go along again. The problem is that I suspect when you get up here, it's going to fail again. So it's just a trade if you're doing it. And, you know, it could be the case that the market collapses and this thing just, you know, rockets on up. But that's not the high probability bet. That's bonds. Let's go see what else we got. UPS. So transports. So UPS, let's see what she looks like. Okay. What time frame you thinking, Tommy? Here's the weekly. So this is United Parcel Service. And this looks like a failure. So I'm looking at the weekly, and you're coming back into the breakdown bars, right? That's these bars. As you come into them, you got over the first one, right? Got a little spurt off of it. Now you're coming into the second one. You came into it last week, you had less volume, you know, so you go over it, you come back underneath it. That was a failure on the weekly last week. Did 12 million back into 21. So that to me, that looks like it's going to keep this from going anywhere for a little while. Now if we look at it on the daily, again, you come, okay, this is interesting. That was Friday, right? No, that was Thursday. So you get a breakout, big wide price spread bar, breakout over the highs. You can expect that to, you know, it was 2 highs it broke in 2 successive bars. You can expect that to trade, you know, 2 to 3 bars. That's what you got. Then you got the fade back on Thursday when the market was weak. A little push back up today. What does it do today? 101.60 is the high. It gets to 101.61. Doing 1 million in case on the way down 4.4. Coming back down. This is going to come back down, do a retest regen off that high it broke. And because you broke 2 of them, you'll have 2 of them to work with on the way back. That means you're going to find some support down here somewhere, more than likely on the retrace. And if today was that high, you've got a little ABCD structure that's going to take place to take you down into them. So I would think you get into this high, you'll be back within 1, 2, 3, 4. Well, you won't be back within 6 bars, so maybe even up here you'll get the buy. But I suspect, given the weekly, it's probably nothing more than a little trade if you're trying to make a $2 trade. So that's the way that looks. Oh, you're trying to go short. Okay. Yeah, well, I just agreed with you. you got the setup in both cases. You're over, under, back, under. I just don't think you have much downside yet, because you broke swing points. You got nice support here, this big bar. You're probably going to find support the first bounce, then come back up, and that might be the setup that you're looking for. But yeah, it does look like it's failed both today on the daily, failed Friday on the weekly last week. Okay, I'm about out of time here. Tomorrow and the rest of the week, if we go back here, I still think, just like last night, I still think your wild card is the NDX. This is the one that's driving things. And if you look at it, Apple and Google are the two main drivers right now. The stocks, I didn't look at the stocks, but if you look at the semiconductors, they had a push up today. It was okay volume, but this looks range trade to me right now. You've got a lot of resistance overhead here, so it's going to be hard to get over this area. So I would think that, looking at it from that perspective, this looks like a tough spot, and it's coming right back up into it. So I doubt that that's going to help the NDX. It's going to have to be Apple. It's going to have to be Google. It's going to have to be Microsoft. It's going to have to be the big three, 33% of it. If they can't push it, then I suspect the NDX is going to come back. And the NDX, to me, is the one to watch. Because if the NDX fails again and starts to come off with volume, right, that's another failure. And the thing that people watch, you know me well enough now, I don't really watch this series of higher lows, a series of higher highs like everybody else does. Matter of fact, they wouldn't even call that one a high. This one actually has, you got a higher high here, higher high there, 3 higher lows right now, and potentially a 4th higher low. And so people are looking at this saying, okay, we're going to break higher, right? Because you've got the higher lows, higher highs. That may be true. It may happen, but right now you're fighting resistance, not as much here as in the broader market. So when you're looking at the heavier weighted index, yes, this one's pushing. But when you look at the lighter weighted ones, the ones that are more distributed, like the IXIC, the NASDAQ Composite, or even on the Russell small caps, where it's a broader weighting and it's none of them nearly as heavy, it's a different looking story. So if the NDX gets another push, we can push up on the NDX to this breakdown bar on the NDX, the April 4th bar, and that would take this one up to the first one, and then that's where they probably fell from. So there is more room for a little bit more bounce if they want to do it. I don't see it in the sectors, and it's ambivalent in terms of the indexes, because the indexes look like they're about ready to roll back over. All right, have yourself a great night. Thanks for joining me. Take care. And until next time, I'm LA. Now, this is, and it was, your daily TA wrap. Have yourself a great night. Take care, and I'll see you next time. Good night.